All right, so today we're going to be taking a deep dive into Dr. Reddy's Laboratories.
Okay.
And you've given us quite a lot to work with here.
Yeah.
We've got earnings called transcripts and
Yeah.
financials, press releases,
Mm-hmm.
even some auditor reports. So
Non cremation.
clearly you want to know how Dr. Reddy's is doing and what we think about their future.
For sure.
Yeah, are they on the right track? What are their biggest challenges? Those are some of the questions we'll be tackling today.
Absolutely. And with all this information, we should be able to uncover some valuable insights.
I think so too.
So maybe a quick snapshot for context.
Yeah.
Dr. Reddy's Laboratories is a global pharmaceutical company
Mhm.
founded back in 1984,
Okay.
based in Hyderabad, India.
Okay.
They're known for providing affordable medications across a range of therapeutic areas.
Right.
Major markets include the US, India, Russia, and several others.
Okay, so they've been making headlines recently,
Mhm.
especially after releasing their Q3 FY25 results. And at first glance, that 16% year-over-year revenue growth seems impressive.
Yeah, it is, but there's more to the story.
Okay.
That figure includes the impact of their recent acquisition of a nicotine replacement therapy business,
Okay.
NRT, things like, nicotine patches and gum, designed to help people quit smoking.
Oh, okay.
So stripping away that NRT impact, the underlying growth is closer to 7.5%.
That's still decent.
Yeah.
But it makes you wonder, does this reliance on an acquisition signal a shift in their growth strategy?
Yeah, that's a good question. And it's something for any investor to consider.
Right.
Are they, prioritizing quick gains through acquisitions, or is this simply a strategic move to expand into a new market? It's too early to say for sure, but definitely something to keep in mind as we go deeper.
Okay.
Now, before we get lost in the details,
Yeah.
it's worth noting that Dr. Reddy's boasts a healthy net cash surplus
Okay.
of $187 million and steady EBITDA margins.
EBITDA, for our listeners who may not know, that stands for earnings before interest, taxes, depreciation, and amortization.
Exactly.
Gives us a clearer view of the company's operating profitability.
Yes, and in Dr. Reddy's case, those steady margins suggest they're managing costs well,
Okay.
which is crucial in the competitive pharmaceutical industry.
Right.
This financial stability gives them some flexibility to make strategic investments.
Mm-hmm.
Speaking of which, let's talk about semaglutide.
Oh,
Yeah.
semaglutide, a diabetes and weight loss drug that's been generating a lot of buzz lately.
For sure.
Dr. Reddy's is gearing up for a major generic launch of this, and it seems like they're betting big on this drug.
Semaglutide does hold immense potential.
Yeah.
Patents in several key markets, including Canada, India, Brazil,
Okay.
are set to expire in 2026,
Mm-hmm.
opening the door for generic versions.
Got it.
Dr. Reddy's plans to file for approval in Canada early next year,
Okay.
aiming to launch as soon as those patents lift,
Right.
followed by a global rollout.
But they did mention that the U.S. and Europe would be later,
Right.
likely in 2027 or 2028,
Yep.
due to different patent timelines.
Different patent timelines, that's right.
Sure.
Now, what's interesting is their fully integrated approach to semaglutide.
Okay.
They're manufacturing the API.
The active pharmaceutical ingredient,
Exactly.
the core component of the drug.
Yeah, they're doing that from scratch.
Wow.
They're handling the formulation in-house and only sourcing the delivery device externally.
Okay.
This level of control over their supply chain is a strategic advantage,
Mm.
especially in a market that's expected to face high demand.
Could this be as big for them as Revlimid was in North America?
Potentially, yeah.
That was a major win for them.
It was a big win, but we need to consider how pricing and market share will play out.
Right.
Revlimid set a high bar.
It did.
What intrigues me is that Dr. Reddy's is already thinking beyond Revlimid's eventual patent expiration.
Okay.
They're allocating resources to semaglutide, other high-potential products, and building a strong biosimilars portfolio.
To clarify for our listeners, biosimilars are highly similar versions of already approved biologic drugs.
Exactly.
They're designed to have the same safety and effectiveness, but often come at a lower cost.
Right, and it's a growing segment within the pharmaceutical market,
Sure.
and Dr. Reddy's seems determined to be a key player.
Got it.
Now, moving beyond their traditional focus on generic drugs,
Yeah.
their recent acquisition of Halion's global NRT portfolio is a clear step toward diversifying their revenue streams.
Right. This deal brings them well-known brands like Nicotinell and Nicobate,
Yep.
expanding their reach in the consumer healthcare market.
Mm-hmm.
It seems like they're building a multi-pronged approach to growth, which is pretty savvy in such a dynamic industry.
It is. This acquisition gives them a strong foothold in the consumer healthcare market,
Okay.
which is known for its steady growth and less regulatory complexity compared to prescription drugs.
Makes sense.
However, the integration of a global portfolio comes with its own set of challenges. It'll be interesting to see how smoothly they manage this transition.
This acquisition, combined with their investment in semaglutide, paints a picture of a company that's not afraid to make bold moves.
It does. And while those are some of their headline-grabbing initiatives,
Right.
there's a lot more to unpack.
Yeah.
Shall we dive deeper into some of their other strategic bets?
Absolutely. Let's do it. Okay, so we've talked about their big move into consumer healthcare
Right.
and their bet on semaglutide,
Uh-huh.
but Dr. Reddy's has a few more irons in the fire, so to speak.
Oh, yeah, for sure.
Let's talk about their partnership with Nestle India.
Okay, so that partnership's focused on nutraceuticals and supplements.
Right.
And it's a fascinating example of Dr. Reddy's long-term vision.
Okay.
You know, it might not make a huge impact on their bottom line for a couple of years,
Mm-hmm.
but it positions them strategically in a rapidly growing market.
For those who might not know, nutraceuticals are products derived from food sources that claim to provide additional health benefits beyond basic nutrition.
Yeah, think of things like vitamins, minerals, herbal extracts, even certain fortified foods.
Right.
It's a market with enormous potential
Right.
as people become more proactive about their health and wellness.
Definitely.
Partnering with a global giant like Nestle with its brand recognition and distribution network
Yeah.
is a smart way for Dr. Reddy's to enter this competitive space.
Smart move.
Yeah.
They've also been making waves in India with the launch of toripalimab
Yes.
for a specific type of cancer
Uh-huh.
and ilobixibad for chronic constipation.
Right.
These launches seem to reinforce their commitment to providing affordable health care in their home market.
So these launches are significant for a couple of reasons.
Okay.
Firstly, they address specific unmet medical needs in India,
Right.
which aligns with Dr. Reddy's mission of access to healthcare.
Mm-hmm.
Secondly, they demonstrate their willingness to go beyond generics and invest in innovative therapies,
Okay.
even in price-sensitive markets.
It seems like they're trying to strike a balance,
Right.
expanding their global reach while also strengthening their position in India.
Precisely.
Okay.
It's a nuanced strategy that requires them to navigate diverse market dynamics.
Right.
Now, while their expansion into new areas is exciting,
Yeah.
we can't overlook the challenges they face in their core generic drug business.
Okay.
The U.S. market in particular is known for its intense price pressure.
Price erosion in the U.S. generics market is a major concern for any company operating in that space.
Right.
What factors are driving this trend?
Well, increased competition is a key factor.
Okay.
As more generic versions of a drug enter the market,
Yeah.
prices inevitably go down.
Makes sense.
Additionally, large buying groups and pharmacy benefit managers
Okay.
who negotiate drug prices on behalf of insurers and large healthcare systems, they wield significant power,
Right.
putting further downward pressure on prices.
That's a tough environment.
It is, yeah. Dr. Reddy's acknowledged this challenge in their earnings call and emphasized their focus on operational efficiency and cost control to mitigate the impact.
So it's not just about having the right products.
No.
It's about producing them efficiently
Uh-huh.
and keeping costs down to stay competitive.
Absolutely. They need to be laser focused on maximizing profitability
Yeah.
in a challenging pricing environment.
Okay.
And it's not just the U.S. market that's presenting challenges.
Right.
They also highlighted slower growth in certain segments of the Indian market,
Okay.
specifically cardiovascular and gastrointestinal drugs.
This slowdown is interesting considering India is their home turf.
Yeah.
What might be causing this?
Well, it seems to be a combination of factors,
Oh, yeah.
including slower volume growth in those therapeutic areas and the need to adjust their sales and marketing strategies.
Got it.
They expressed confidence in their ability to address these issues,
Okay.
emphasizing increased investment and focus on these segments.
It's a reminder that even in a familiar market, companies need to adapt and evolve to maintain growth. Now, circling back to their global ambitions,
Yeah.
their push into biosimilars is particularly noteworthy.
Mm-hmm.
The recent filing for a denosumab biosimilar
Yes,
in partnership with Alvotech is a big step.
it is.
This move makes a lot of sense considering their expertise in generics.
Right.
They already have the scientific know-how, manufacturing capabilities, and regulatory experience to navigate the complex world of biosimilars.
Exactly. And while the biosimilars market is crowded with established players,
Yeah.
Dr. Reddy's has a few advantages.
Like what?
Well, they have a strong presence in emerging markets,
Okay.
where biosimilars are just starting to gain traction.
Got it.
They can leverage their existing relationships and distribution networks to gain a foothold in these markets.
So they're not just trying to compete head-on with the giants in mature markets.
No,
They're strategically positioning themselves in areas where they can capitalize on early growth.
precisely. And their reputation for providing high-quality, affordable medicines
Hmm.
will likely resonate with both healthcare providers and patients in these cost-sensitive markets.
Right.
Their partnership with Alvotech also speaks volumes about their approach.
Yes.
Yeah.
It seems like they're not afraid to collaborate and leverage external expertise,
Yeah.
especially when entering new territories.
Partnerships are crucial in the biosimilars market.
Why?
It's a capital-intensive undertaking,
Hmm.
and collaborations help to share the costs and expertise needed to bring these complex products to market.
Makes sense. No, we've talked a lot about their strategic moves.
We have.
But let's shift gears and discuss the risks they face.
Of course, every investment carries its own set of risks. And with a company as dynamic as Dr. Reddy's,
Yeah.
it's important to consider both the opportunities and the potential downsides.
Hmm.
One of the most prominent risks, as we've already discussed, is the persistent price erosion in the U.S. generics market.
This seems like a challenge that's not going away anytime soon.
It's not. No, how can they effectively manage this risk?
Right.
Well, they've already highlighted their focus on operational efficiency and cost control.
Okay.
Essentially, they need to be leaner and more agile than their competitors to maintain profitability.
Hmm.
But beyond cost management,
Yeah.
they also need to be very selective about the generic opportunities they pursue.
Okay.
It's not just about launching as many generics as possible.
Right.
It's about identifying those where they can carve out a sustainable advantage.
Got it.
Perhaps through niche formulations or specialized manufacturing processes.
So it's about being strategic and focusing on quality over quantity.
Exactly.
Okay.
Another risk stemming from their current success
Mm-hmm.
is their reliance on a few key products,
Okay.
particularly Revlimid.
Revlimid has been a significant revenue generator for them.
It has.
But what happens when its patents expire and competition floods the market?
That's a valid concern, and it underscores the importance of their strategic moves
Okay.
into new areas like biosimilars and consumer healthcare.
Right.
They're essentially building a safety net by diversifying their revenue streams.
Makes sense.
If one area weakens, they'll have others to cushion the impact.
This diversification strategy seems like a prudent move to mitigate the risk of relying too heavily on any single product or market.
It certainly is, and it demonstrates their commitment to building a resilient business for the long term.
But even with a solid strategy,
Yeah.
there are external factors they can't control.
Right.
The ongoing regulatory investigations in the U.S. are a reminder that the pharmaceutical industry operates under intense scrutiny.
Absolutely. These investigations stemming from past issues
Yeah.
cast a shadow of uncertainty over the company. Any negative developments could have significant financial and reputational consequences.
Right.
It's a risk that's difficult to quantify, but one that investors need to acknowledge.
It highlights the importance of ethical conduct and regulatory compliance in this industry.
For sure.
Any misstep can have a lasting impact. So we're seeing a company at a pivotal point in its journey.
Yeah, we are.
They're making bold moves to expand globally, diversify their portfolio,
Right.
and become a leader in new areas like biosimilars.
It's an ambitious path,
It is.
and one that's not without its challenges.
Of course.
But what's clear is that Dr. Reddy's is not content with resting on its laurels.
Right.
They're actively shaping their future.
They've built a strong foundation.
They have.
But now they're pushing boundaries and taking calculated risks to reach the next level.
And that's what makes them such an interesting company to watch.
Yeah.
Their journey is a microcosm of the larger trends shaping the pharmaceutical industry. And their success will depend on their ability to adapt and innovate in a constantly evolving landscape.
Yeah, it really is a fascinating story.
It is.
So as we wrap up this deep dive, what are some of the things that investors should be watching
Okay.
in the coming quarters to gauge Dr. Reddy's progress?
Well, several metrics and developments come to mind. Firstly, their ability to seamlessly integrate that NRT acquisition. Are they retaining key talent, realizing anticipated synergies, and ensuring a smooth transition for customers?
So basically, are they making this new business truly their own?
Exactly. On the product front,
Yeah.
the progress of their semaglutide launch will be crucial.
Right.
Can they secure timely approvals in those key markets?
Mm-hmm.
Can they scale up manufacturing to meet the expected demand?
Okay.
And how will they position themselves on price?
We've talked about the potential of semaglutide,
We have.
but its success is far from guaranteed.
Right.
It'll be interesting to see how these factors play out.
Indeed, we also can't forget about their biosimilars pipeline.
Right.
Are they hitting milestones in their clinical trials?
Mm-hmm.
Are they forging strategic partnerships to
I-
expand their reach in this market?
Biosimilars are a long game,
They are.
requiring significant investment in patients,
Yeah,
but the potential rewards are substantial if they can establish themselves as a leader.
absolutely. And of course, those U.S. regulatory investigations are still looming.
Right.
Any news on that front could have a ripple effect,
Yeah.
for better or worse.
It's a reminder that even with the best laid plans,
Yeah.
external factors can heavily influence a company's trajectory.
Certainly any resolution, whether it's a settlement or
Okay.
a clean bill of health,
Mm-hmm.
would lift a cloud of uncertainty.
Yeah.
But any adverse findings could have serious consequences.
So it's a multifaceted situation for investors to consider.
It is.
Strategic execution, product launches, regulatory hurdles.
Yep.
It seems like Dr. Reddy's is standing at a crossroads.
They've achieved remarkable success
Yeah.
with their foundation in affordable generics,
Mm-hmm.
but now they're aiming to become a frontrunner in innovation and specialized therapies.
It's an ambitious goal,
It is.
requiring them to leverage their existing strengths
Yeah.
while simultaneously developing new capabilities.
For sure. And for those following Dr. Reddy's story,
Mhm.
this raises a compelling question.
Okay.
How will they maintain their commitment to accessible, affordable medications
Right.
while pursuing their aspirations in higher-priced innovative therapies and biosimilars?
It's a question of balance,
It is.
one that many pharmaceutical companies are grappling with,
Absolutely.
finding that equilibrium could be the key to their long-term success.
It could be, and it's something we'll continue to track as their story unfolds.
Well, I think we've given you plenty to consider today.
I think so.
A company in motion
Yeah.
with a lot at stake and a future full of possibilities.
Indeed, Dr. Reddy's Laboratories.
A company worth watching.
Absolutely.